We're coming to you from the CoinDesk podcast studio presented by BitGo. Founded in 2013 with the first institutional-grade Bitcoin wallet, BitGo is the gold standard in custody, staking, and settlement. Today, BitGo supports over 800 coins and processes 20% of all Bitcoin transactions by value. Check them out at bitgo.com. Our next guest is Abra founder and CEO Bill Barhydt. He was on the main stage earlier today with other industry veterans to reflect on the last decade as an OG in the space. Bill, welcome to the set.
Thanks for having me.
Thanks for being here. Now, 10th annual consensus. We just heard from Tom Emmer during our break. Yep. Curious to hear your thoughts on the state of regulation here in the U.S.
Yeah, look, I mean, like basically getting the SEC guidance on banks being able to custody last week, that was that was huge win, something we didn't expect to happen. 21, I think we kind of expected it to get through the House in some form. I think the Senate is unlikely to take it up anytime soon. But the fact that, you know, we're now seeing kind of a sea shift in bipartisan sentiment around certain crypto issues, I think is really, really exciting.
Now, Bill, you are truly an OG in this space. Abra has been around for 10 years. I don't think many people can say that ever. What, in your opinion, are some of the most crucial events that have shaped the industry over the past 10 years?
Oh, wow. I mean, you know, when we started Abra, there was just Bitcoin. You didn't say you were a crypto company, you were a Bitcoin company, right? I mean, what's this Bitcoin thing? Smart contracts changed everything again because we had programmability, which gave us tokens, which gave us then ICOs, which gave us meme coins, et cetera, right? So they gave us DAOs, and so the smart contracts was kind of the second pivotal event, and now we've had just kind of a range of things like over the years, and obviously the whole regulatory landscape, which everyone focuses on, is kind of its own track. You know, it's a very US-centric track. Everything else I was describing is kind of a global phenomenon. But yeah, I mean, it's just, you knew everybody in this space 10 years ago, right? Now I look around, it's like I don't recognize anyone. It's crazy.
How many people are still here that you've met 10 years ago?
Oh,
everyone,
90%. Once you get sucked into the vortex, it's very, very hard to get out.
Right.
And the deeper in the rabbit hole you go, the more of a believer you become. There's very few people that I've gotten to know along the years who've just disappeared from the space. Really, almost none.
Bill, what do you think it is about the space that just sucks people in and keeps us here forever? I mean, I'm definitely one of those people. I can't ever see myself reporting on another industry, and it's kind of wild to think about that.
I think it's this idea of decentralization, which is what Bitcoin represents at its core, that we don't have to put trust in centralized, monolithic institutions where we've kind of lost the narrative a little bit around checks and balances. This represents actually giving the power directly to the people that created this new monetary network in the first place, and that's what Bitcoin represents. It represents an entirely new, sound monetary system, and that resonates. It resonates with libertarians. It resonates with entrepreneurs. It represents with internet developers who've always believed we should have internet-native money, and so you come at it from a different perspective depending upon, you know, your background and the context, but we all kind of get to the same place eventually, which is this new financial system is changing everything. And now it feels like it's starting to. All the promise and the hype is starting to like live up to that promise.
Now, of course, crypto is revolutionizing the financial system, but, you know, I would assume we had a few developments over the past 10 years that were maybe, you know, a little cringy. What was
a lot of developments that were cringy?
Okay, yeah.
I come with examples.
I guess so. I try to be positive,
yeah.
You know. What was the cringiest for you?
I mean, some of the ICOs, the ICO boom, like that was pretty cringy to me in the earliest days when you're like, they're raising money for what and from whom? And I probably would have said the same thing even if there was no kind of token involved, if they were doing what they were doing, but that was pretty cringy. I would say the whole kind of it's the blockchain and not Bitcoin movement, which created this kind of enterprise blockchain moment for about 10 months. That made me completely insane. I said, no, it's not the blockchain, it's the entire network, and it's the fact that we've solved the double spend problem. whatever that means, but it wasn't about the enterprise blockchain, so that was another cringeworthy kind of moment for me. Luckily, it's mostly kind of gone away. We don't hear about that anymore. There's more, but those are probably the ones that stand out, like at the top of my, pet peeves, Bill's pet peeve list for,
Hopefully
I kind of
we're over
associate that with consensus, because there's always like some theme going on, right?
Yeah.
Like real world assets, which is a big theme this year. I can get behind that because it represents kind of smart contracts correctly. Some of the other stuff, I'm like,
DPIN, can you get behind DPIN?
Sure, absolutely.
Okay.
Absolutely.
Okay. So just with your experience, 10 years, I think you have enough information to kind of spot out the cringy things, the things that are not going to be around for a while.
Decentralization.
Right.
Why do we have a blockchain in Bitcoin? It's because we can't achieve transactionality through a normal database, because as soon as you have a single database, you're trusting someone by definition. And so what are the applications of decentralization that make sense? Decentralization is very, very expensive. Bitcoin is very inefficient. It's still inefficient 10 years later. It's just as inefficient as it ever was. It's supposed to be. That's the cost of decentralization. What needs that? Well, you talked about DPIN. There are real world assets. There are other examples.
Well, I guess I got to get your perspective on the approval of the spot Bitcoin and ETH ETFs then, because those really centralize things,
100%.
right? And so curious to hear if those were such a catalyst for you, and if you think that they're positive for the industry.
That's a great question. I actually see it in two ways. I see the spot ETFs as kind of a marketing catalyst, which is fantastic. It creates awareness. It kind of, for some investors who don't understand what the decentralization movement means, supporting this new asset class via a Securities and Exchange Commission backed offering is compelling because they don't understand the nuance.
Right.
But for people who understand the nuance, they like it because it's marketing for the space, but they would never buy it.
Right.
Because they don't believe in the tenets of letting somebody else manage my assets in a decentralized network. It doesn't make sense. And so that's like what my company Abra does. We offer ways that are closer to holding Bitcoin and crypto, right, to the way crypto was intended to be used in the first place, where you have kind of self-sovereign title over your assets at all times, right?
Now, would you say the advantages of the ETFs outweigh the negative effects of it on the industry then, or?
I don't look at it that way. I mean, look, people are entitled to do, I'm a libertarian, so let people do what they want to do, and if you don't know enough or trust anything enough to hold Bitcoin any other way, do it. It's fine. But you're also probably holding dollars that way anyway, at which point, give it a choice between you holding dollars that way and Bitcoin that way, I'll choose Bitcoin. But other than that, I mean, people should be allowed within reason to do what they want to do.
Fair enough. So Abra had quite the back and forth with the Texas State Securities Bureau last year, and you settled that lawsuit earlier this year. Looking back at it, was that a positive development for you as a company and for the regulatory landscape in general? Did you learn from it?
Well,
did it make things better, or was it?
It's positive insofar that it's all been put to rest, and we're fine and we're moving forward and we're growing the business. I think that certain regulatory actions can be a distraction, but as a company in the financial services fintech world, whether it's crypto or something else, there's a kind of cost of doing business now in the United States where we are somewhat overregulated, to put a fine point on it, and you have to lawyer up as a result. And so that's kind of the modus operandi for every fintech company in the U.S. now, is you recognize that there's kind of a legal cost of business. You try to capture that back in terms of getting a moat or a competitive advantage once you've done the heavy lifting. We don't want to have to do it in certain cases. Certain cases it makes sense, but regardless, once you've done it, you have that moat. And you try to take advantage of it to put like a more positive spin on it, I guess.
Yeah, certainly. I'm sure it was a lot easier to operate 10 years ago.
Yeah, I mean, look, Wild West is the Wild West by definition. And, financial services is not really meant in the United States to be the Wild West. And so I get that. And so what we want is we want to operate within the checks and balances of how the government was intended to work. We don't agree. There's an adjudication process, things like that, right? We're okay with like reasonable regulation that operates within the intent of past laws, with a checks and balances where the courts and Congress and the executive branch have equal say.
Bill, are we in a bull market?
Oh, absolutely, we're in a bull market.
Absolutely?
Yeah.
All right, and what's the next catalyst you're looking out for?
I mean, I'm not really here to give investment advice, but my personal perspective is that the government cannot afford the interest rates where they are. It represents a systemic risk to the banking system. It represents a systemic risk to the government as a whole because we can't afford the interest on the debt. So they will look for any and all means possible to get the cost of servicing that debt down, which by definition means pumping more money into the U.S. economy, right? Which usually means risk on assets get the big benefit of that, historically stocks and real estate. Now, of course, crypto, stocks and real estate. And this time, I think it's going to be an even bigger kind of game on scenario because of the amount of debt that we took on over the last 4 years, which has to be reset now. It simply has to be, right? If you look at every scenario, not resetting the cost of the interest on the debt is a disaster.
Bill, we are going to have to leave it there. Thank you so much for joining us here at Consensus 2024.
Great to see you.
Joining us now is Nodle CEO and co-founder Micha Benoliel. Hello.
Hi, Jen. Hi, Lynn.
Nice to meet you.
Good to meet you too.
How's your day been so far? How was your trip to Austin?
Well, the trip was a bit chaotic, with the storm, but we're here, and I think it's going to be a great event. A lot of people from the industry, a lot of friends, so great to be here.
How does this consensus differ from the past consensus that we've been to? How are conversations looking different now?
I think there's a lot of excitement, probably around also the regulation that seems to become more clear in the US, and I think it's a big step that happened with the votes at the House of Representatives. So I think everyone is ready for a big coming year and for crypto, and I think it's amazing.
Have you walked the conference floor? What's it looking like out there?
Well, I didn't have the time yet. I landed at 4 a.m. So, but I'm going to do that right after.
You're tired. You're tired. All right.
I'm good.
Let's talk about Nodle. What is it?
So Nodle is a decentralized infrastructure of smartphones, and it's growing rapidly. It's adding 3,000 to 4,000 people a day. Any of you can participate. All you need is a smartphone and to install the Nodle app. But we are here mainly to demo and to show a new application built on top of the Nodle network, which is called the Click app. And we think it's very timely. It's a great application on blockchain as well. It enables anyone to prove reality by authenticating photos and videos they take with their smartphone and share it anywhere on any social and any messaging and sharing the proof with it, so to prove it's real.
How does the authentication process work?
So it's when you take a photo or a video with the Click app, we take all the metadata that we capture from the phone, and we add that metadata to the media content. We sign it, we send it on the decentralized internet, which is IPFS, and then we make a record on the Nodle chain with a proof of authenticity. And now you can share that content anywhere, and people will be able to verify that it was taken at a certain time, thanks to the proof of time with the chain, and proving the location as well. And that's what we can do very well with the Nodle network, because we have a lot of nodes on smartphones, and we can help with what we call digital witnesses, prove the location of where a photo or video was taken.
I want to know how the digital witnesses work, but before we get there, let's say I am looking at a photo of the Mona Lisa, and I open up the Click app and I take a photo of the Mona Lisa. How do you prove that picture is not the real Mona Lisa?
So when it comes to authenticating media content, there are a few things that are very important. So proof of time, and the chain does that well. The proof of location is key. And then there is all the provenance information. And because we have this secure environment that we created on the phone, we can make sure that the signal of any sensor in the phone, like the camera or the GPS, are not hacked, and then prove that basically this is authentic and original.
Now, this is a very niche focus that you have here. How did you get interested in that? How did your journey in crypto start?
So I think it's maybe just niche for now, but when you look at AI and generative AI, so AI generated the equivalent of 150 years of photography in just a year and a half. So if we don't do anything, if all of us don't actually start to authenticate content and push authenticated content online, we're going to end up in the matrix.
Helene thinks it's niche. I don't think it's niche. I think this is a problem that needs to be solved. I'm curious how the network effect works. Is it like a network of verifiers? What does the authentication network do?
So just to address the market first, so it's no more niche. We just signed a big enterprise customer called Hayden AI, and this is going to go mainstream for authentication of content in the US. Then when you look globally, you have 50 countries going under election this year. That's 2 billion people going to the polls to vote. So we're going to need a tool to fight misinformation, disinformation. So the Click app is perfect for that. And about the network, so the more users join the network with the Click app or the Nodle app and participate in the network, the more nodes you have that can basically help prove the location and authenticate content. We can't wait to have millions of people on this app and then have maybe hundreds of millions of content authenticated. And now you have a source for user-generated content that you can trust. The beauty of it is you have 7 billion smartphones on the planet. And with this technology, now you can trust any of the 7 billion people for the photos and videos they take. So imagine the revolution, especially in your industry, in media. This is huge.
I like that. I see your point now, Jen.
Yeah, right. Are you thinking about an integration with a mainstream app like Instagram? And the reason I ask you that is for this to work, people need to use it, right? And it's so easy to open the camera app on your phone. It's easy to open Instagram and snap a pic. What's incentivizing people to open the Click app, take a photo, get that photo authenticated, and then share it on one of these other platforms that they would use otherwise?
So great question. So today, you need to use the app to take a photo or a video to authenticate it. Pretty soon, when we add the identity element, because it's your reputation that is at play, you will be able to authenticate almost any content you produce. We are doing tests now for documents as well with a big media group in Europe. And to come back to your point on Instagram or any social, when you share the Click link to your media content, it creates a preview. And you can share it on any messaging, any social platform. Instagram is more closed than others. We hope that at some point there will be bridges to push content on Instagram or Thread. But we had a month ago a great VC, Fred Wilson, who is kind of a visionary, especially when it comes to blockchain and decentralized network, who posted on Farcaster his first Click. All he needed is just share the link, and then people could see the preview of the photo, and then eventually go to the Click page and verify the authenticity of the photo that was taken.
Now, Micha, I know that you like to talk about AI and the intersection of AI and blockchain. And one issue or one concern with AI is that it could contain bias and misinformation because of the data that it is trained on, essentially. And blockchain can help with that. Explain to me how that will work.
So in the case of the Click app, once you reach a very large amount of media content that has been authenticated, eventually an AI system or model that wants to train on authenticated content to avoid to have actually fake images or videos taken into the model, they can leverage the user base from the Click app. And because there is blockchain behind every photos and videos, now you can trace ownership. So you can clear the rights with all these people automatically.
Why do we need to use DPIN here?
Sorry?
Why do we need to use DPIN?
I think DPIN is, so it stands for Decentralized Physical Infrastructure. It's a jargon that was created by the industry to define the category we are in. IoTex, who is a DPIN player, actually said Nodle today is the largest DPIN because we have almost 780,000 participating smartphones into the network. So it's growing pretty fast now. And I think it's just to give a category to the industry for any kind of decentralized infrastructure. I also think it's going to become more and more important because when you decentralize an infrastructure, whether it's an infrastructure of smartphones for doing applications like we do with the Click app, or it's an infrastructure of, I would say, wireless nodes, for example, or storage, it makes the infrastructure more resilient.
So, Micha, you're a serial entrepreneur. You are the CEO of Nodle. You had a company before. Now you're already building a new company as we sit here. Where do you see opportunities in the space for new companies?
Well, I think anyone, especially in the Depin space, anyone who sees any big application already deployed in the Web 2 space, there's a chance that this application can now be rebuilt with a more decentralized way of building an infrastructure. And the great thing is everyone who participates also gets some benefit from participating. People get paid. Like the Nodle network distributes every month $300,000 to people participating to the network for sharing access to their smartphone resources. So I think it's the new way of building a very, very big technological infrastructure and avoid the problems of what we are living today with a few big incumbents who are kind of close to monopolies and are blocking all startups and initiatives from other companies to enter the space. So it's time to really revolutionize this. And I think, the regulation comes right in time. And we're going to see, I mean, the next 10 years are going to be mind-blowing, according to me.
What do you think needs to happen for Web3 to actually solve that problem? I think we understand the problem. There are a few big centralized players that are locking out creators that are taking all of the value that's created for themselves. I think that problem is understood, but all of these solutions haven't really been able to break that yet. What do you think needs to happen for people to really understand that problem and start changing their behavior and using some of these other apps, starting interacting with startups and taking their eyeballs and money away from those centralized players?
I think up until recently, there was a big problem of user experience. People are not going to switch to a Web3 solution if their user experience is much harder than what they used to experience with traditional apps and applications in the Web2 world. But today, I think at Nodle and with the Click app, we do a pretty good job. We abstract all the complexity for joining. So I think that was the first big barrier to cross is user experience. I think once people realize that now, oh, I can do the same thing that I used to do with a Web2 app in the Web3 world, and now I own the content I produce, I own my data, and if it is used, I get paid for it. Once people start to realize that, I think it's going to go like wildfire.
It's a win-win.
It's a win-win. I look forward to the day. I also think that that would be a great future, but I don't know what needs to happen. It's user experience?
User experience and sharing the benefits of the infrastructure. I have a very good use case. We work in Africa with a company leveraging the network for locating motorbikes, the Boda Bodas in Uganda. They needed to build basically an infrastructure to locate these motorbikes. In less than a month, they spread out the Nodle library on their phones. People heard it was the Nodle library used into the app. They started to download the app, and now we have like the whole country of Uganda is lighted up in a month, and people who are renting or paying for these motorbikes and doing the taxi job of hailing people, basically, they can be located thanks to that network.
Micha, I look forward to following your journey.
Okay.
Thank you so much for joining us.
Thank you, Jen.